Welcome back to the channel. I'm glad you're here. You want to know why? Because I don't want you to lose your money. Today we're talking about investment scams, investment fraud, and we're talking about shysters and people that want to take your money and how to avoid those pitfalls and traps. We're going to talk about a little bit of history first. There was a gentleman back in the 1920s. His name was Charles Ponzi. Mr. Ponzi was responsible for a very large fraud. It was back in those days where he promised his investors 50% return in 90 days. A lot of people invested with this gentleman. A lot of people lost their money. And Mr. Ponzi was eventually arrested for fraud. That was kind of the beginning of the fraud era in the capital markets. Back in 2008, 2009, in that era, we had Mr. Bernie Madoff. He was responsible for a huge Ponzi scheme that amassed amount of $50 to $65 billion on record is what he stole from his investors. Huge sums of money. And one of the things that I would like to tell anyone that's watching this video, the number one rule to avoid getting scammed by a fraudster is understand the investment that you're getting yourself into. If you are not a real estate person, do not invest with someone that is pitching you some crazy deal with some numbers that are far-fetched. If you're not a person that's well versed in the finance and investment field, same thing carries there. The fraudsters are able to use their knowledge as strength because they know it's your weakness. I get pitched deals and investments all the time, and guess what? I say no all the time because 9 times out of 10 I'm not interested, or I don't know the market, or I'm not in that industry, or I know that you can't follow through with what you're saying. It's just that simple. I know how money works. Let's move forward. Above average returns is one red flag. People promising a guarantee. We can guarantee this amount of money in this amount of time, which is usually a short time frame that they're guaranteed these funds back with interest on top of that. Number 3. One of the problems that I see new investors having is greed. Greed is taking you to close your eyes and say, wow, this investment really sounds good, but I'm so greedy that I can't see through the cruelty behind it and the actual investment being a sham, just magic, just going to disappear. The reason why you're thinking like that is because your greed is taken away from your critical thinking and your thought patterns of saying, hey, is this feasible? Is this attainable? And how does this work? That's your logical side of the brain thinking, and that's what's going to get you through. But when the greed can oversight all of that and push you to say, hey, my money's sitting in the bank. This guy's pitching me a deal. It sounds good. He looks good. He's sharp. He knows what he's talking about. What's his track record? Have you been to his office? How long has he been doing this? What's his pedigree? Where did he go to school at? What's his network? What's his current net worth? What's his credit score like? Has he been in jail before? You can find all this stuff out. There's a lot of tricky guys out there, guys, girls. There's a lot of tricky individuals that really know what they're doing, and they have the way to finesse you. They're able to talk and they're able to get you into their graces, because that's what they do. They're fraudsters. They're con men. They know what they're doing. But it's your job to stay away from all that. And Another thing that they do is they're able to build trust, and they build trust through relationships. And it might be taking you to dinner. It might be also winning you over a period of time. One way that Mr. Bernie Madoff was able to gather so many individuals was he was able to go into communities. I know one of the communities that he went into that he had a large influence was the Jewish community. And he was the philanthropist within that community. He gave large amounts of money to nonprofit organizations within that community, and they respected him and put him on a pedestal. So it made him look from the outside as a very great person, and someone that was giving back to the community, was someone that would be trustworthy. Correct. Building trust. So what we want to move on to is to move on to understand, seek knowledge first, gain understanding, understand the investment, understand who you're working with, do your homework, and do background checks. These are for people that are not, these are for alternative investments. These are people that are not within your tier 1 banks and private equity firms and large institutions. I'm talking about these jokers that you see on the street, or that you might come across, or someone might send your way. These fly-by-night guys. And a true sense of how you're going to understand how not to be scammed. Think of yourself on a high level. Think of yourself as if you were Warren Buffett. Would Warren Buffett sit down and knowledgeably say, I think I'm going to invest in that company? 9 times out of 10, he wouldn't, because he's done his homework and he knows that this does not look right. Something is just does not make sense. Bernie Madoff was able to capture the attention of a lot of large institutions by flying underneath the radar, by having returns that were not over and beyond. He had returns of 1% a month, which equaled out to about 12% per year. And that was not too much. So people were like, wow, that sounds good. The thing that really got a lot of investors into the Bernie Madoff scheme was his consistency. He never lost money in any one year. And that does not work. His chart was consistent. The markets, there's ups and downs. That is within any portfolio, you're going to have ups and downs. So back to Mr. Buffett. He's a billionaire. He's not going to invest his money into things that are not viable projects. He does his homework. You have to do the same amount of homework. And the way that he's made and has amassed his billions was by following his number 1 rule, not to lose money. And with that said, compound interest will grow your account exponentially, but it's going to take years and time for it to grow. You can't grow your money if you're losing it and listening to every single deal that comes your way that sounds fruitful, but it turns out to be a flop. You can't do that. It's just not going to work like that. So understand this. Know your industry. Stick with your industry. Stick with certain sectors that you are familiar with. If you're not an IT person, don't invest in an IT company. That's going to help you out a lot. That's the greatest investment advice that I can give newcomers. And compound interest is king. Make money on top of money. And basically that's all I have for you today. Thanks for watching. Hope you're having a great week. And thanks a lot.